All right, welcome everybody to tonight's very special event, navigating life's transitions. For those that are watching the recording afterwards, we are grateful that you are. This experience, all right, welcome everybody to tonight's very special event, navigating life's transition. It's like an echo of me, brutal. Okay, so for those that are just tuning in, just know that tonight is a very special experience. Very few people in the world have the opportunity to have a team of experts around them, giving them consultation on this important topic, which is navigating life's transitions. Some people are familiar with this, maybe the uber wealthy only, and that is what's found in what's called a family office. Now, for many of you who are watching this, you might be asking yourself, what is a family office? I don't know what that is. Well, the uber wealthy of the world, they have what's called a family office, where they have professionals from different industries who work for a particular family. That family has enough assets that they can demand having professionals dedicated to managing and growing the wealth of that family. Now, for the average consumer, like the rest of us, right, we don't have that privilege. Well, at Pro Insight, we are changing that. We're giving communities across the country the ability to receive consultation collaboratively from top professionals in different industries, as if you were to have your own family office. So this experience is going to be, very unique in that regard. I'll say this, that in the community of Sherwood, Oregon, is where we're focusing our attention this evening. We've sought out, again, the best of the best in the following industries. Real estate, featuring Marie Boatsman. Say hi, Marie. Glad to have you here.
Hi.
Chris Sleeman in wealth management. Say hello, Chris.
Hi there.
We've got Matt Elliott in insurance.
Hey, everybody.
And then we've got Chris Siegfried in mortgage lending.
Thanks for having me.
Yeah, so these professionals, again, as I mentioned, we go community to community across the country, finding the best of the best in these primary industries, and we bring them together for a collaborative experience. And again, that's what we're doing tonight. So with no further ado, I'm excited to jump right in and get started on our first topic, which when you think of life transitions, you oftentimes think of things that you can prepare for and plan for. Some things you can't. And obviously those that you can't or don't prepare for are oftentimes the hardest. And sometimes they're also the most sensitive. They're the ones that maybe you're not super excited to share with everybody, right? Because they're hard and they're difficult. And so we're going to start off with one tonight that has been stated by our professionals is happening to people that they love around them, and they want to be sure and give them the guidance that they need, that they might not get from anywhere else. So we're going to start with the topic of divorce. I think we've all known people who have gone through that, and it's not always easy. So I want to start off. Let's talk with Marie. Obviously, you are amazing in real estate. You're known everywhere, not just locally, but across the country, because of how well you market homes and really get families what they want in real estate. Kind of talk us through maybe just how sensitive it can be, right, when people are kind of going through that situation, and what you do to help people when they're going through that difficult life transition of a divorce.
Yeah, well, first of all, thank you for all those kind words. That's very sweet of you. Yeah, unfortunately, we're seeing, I think, more and more divorce these days in this environment that we're in. And, there's so many aspects of it. And I think really, the earlier that we as a professional can be involved, I think the more we can help. I think there's things that people going through this don't quite understand about the selling, the buying process. And so there's a lot of little tips and tricks just I've learned over the year. I know Matt, Chris, and Chris also have some things, that they also will share. But, just being able to prepare, even when it's not expected. But as soon as we can jump in, we can definitely help guide through so that if there are kids, they're not as disruptive. If both parties are trying to buy potentially, or if they're planning on renting, kind of our advice might vary based on what their goals are as they start to navigate that.
Well, I love something that you said there, Marie, and I know we have some other great professionals that are going to kind of chime into this as well, but sometimes these situations are amicable enough that people can really talk through and decide what's best for the overall family, right? That's obviously going to be in different living situations now. But your concept of starting early, I think, is very critical for people to recognize. Let's ask Chris Sleeman. I know from a standpoint of wealth management, why might in divorce it be important to start early when some people are like, I'm going to wait till like, right to the end before we start making these kind of bigger life decisions at this kind of junction?
One of the things that we specialize in and kind of really pride ourselves on is just being a sounding board and facilitating difficult conversations. You mentioned it, right? Like a lot of us we shy away from, the hard thing. We don't know where to start. We don't know what questions to ask. And so, I think that's, where we start when maybe things are too far gone. And a divorce is imminent. I would say, we being wealth managers and financial planners, especially when we're working with younger people who maybe just got married, try to help facilitate, okay, have you guys talked about money? I think there's a stat out there that the leading cause of divorce in the United States is actually money. So it's, asking questions, hey, have you guys considered, are you doing joint bank accounts? Are you having separate bank accounts? Are you budgeting? What are your goals? We're all individuals even when we're married, but it's oftentimes that, two people will have two separate goals. And so really trying to, again, facilitate that conversation to where there's a meeting in the middle. So we try and stave off divorce as best we can before it gets there. But really when we have experienced this with our clients, it's just letting them know and reinforcing that they're not going through it alone, that, there's us, but also the network of professionals that we have, all of which are on this call. So I don't know if I answered your question well enough there.
No, you did. In fact, you brought up a really interesting point, is that maybe sometimes these situations that seem, irreversible, actually are reversible. Have you found, and I don't mean to position you as a marriage counselor, Chris,
yeah,
but what you said there, if one of the biggest reasons for divorce is money, right? I'm sure that in your practice, you're encouraging these good practices of talking about these things so that you don't get to that point. But maybe this gives hope to somebody out there that's listening, saying like, I just can't do this anymore. I've got to go a different path. And they're hearing you and they're saying, wait a minute, if money were not an issue, then this would not be quite the issue, right? So I love that ending, right? And in some cases that might be, what's in the best interest of everybody involved. So appreciate you sharing that.
And I'm not a licensed marriage counselor. There's my disclaimer. So.
Sign him up.
Matt, Elliott, let's go to you. Obviously, you deal on the insurance side, expert, thousands of families really look to you as the expert when it comes to their insurance needs. When kind of navigating this life transition of divorce, what advice would you give to people who see that either going through it now and or see it, on the horizon, upcoming? What would you say to them?
Well, first of all, thanks for having me. Awesome to be a part of this group. I think on our end, when I have a married couple let me know that they're getting divorced, one of the common things is that only one, maybe it's just the husband, is the only person we've ever really communicated with about the insurance. So once the divorce happens, the biggest piece of advice is, don't assume you have what you need or that it's the way it should be. Because as soon as, we have the first conversation with maybe the spouse that wasn't involved, they might be shocked by what wasn't there or what is there that they don't need. On the other side of things, it's key to have a conversation with both husband and wife or ex-husband and wife, just to make sure that no holes are left or no gaps in coverage are left where, you're exposed to, a huge loss or a huge claim that could bankrupt you or put you in a bad spot if something was to happen. Most of the time it comes down to just making sure our billing's set up so that, hey, we no longer share a bank account. We've got a new account. So we just update that. It's really pretty simple on our end. It's where it gets complicated or, more conversations are had if we're, one person's keeping the house maybe, and then another is buying or having to go rent, just to make sure that that new asset or that new home is covered correctly with the right person involved. And then the other thing that comes up in divorce is, essentially like court-ordered life insurance that comes up often in conversation if there's kids involved. So we're able to help with that, just to make sure that that box is checked in the divorce process.
You mentioned some things about some holes, and typically one spouse deals more with these issues than another, and maybe you already said it, but are there any other holes that people should be aware of, things that they might not have known to look for, especially speaking to that spouse that maybe wasn't always dealing with the insurance agent, right? That person that's always been kind of in the background. What advice would you have for them that would any kind of holes that they should be aware of, I guess?
Yeah, I think the biggest thing is just making sure that, whatever assets you're taking over or assuming in the divorce are protected. A lot of it comes down to not just like physical assets, but, equity in your home, wealth that, Chris has helped you generate. Oftentimes we might have an umbrella policy, which protects above and beyond your standard homeowners or auto policy. And that essentially covers your bank account, covers your future earnings. And if we leave that with one person, and then the other person doesn't have it, now we've got a big exposure there. So that would be one example that especially for folks that have had time to generate wealth and generate, assets and equity, that is very, very important to take care of when households are split.
Love it. Let's go to Chris Siegfried. Talk to us about some things from your space, right? Obviously, you deal with the residential mortgages, right? Typically, when people are even bringing households together in order to purchase. But what might people need to be aware of on the divorce side, right? When people are maybe selling a house that they lived in together, buying two new houses, I'm sure you probably see that. Kind of walk us through maybe some of the pitfalls or some of the things that people wish they would have known had they had a great mortgage advisor like you.
Yeah, thanks, Justin, for having me. This is a great group, so good to learn here. I think a lot of the times on the mortgage side, we're stepping in middle of the divorce. They're now trying to figure out, how do we divide up our assets? What should we do with the house, right? Even before it's court ordered and signed around. In an ideal world, both parties would constantly be involved with the mortgage, right? Knowing all the intricacies, how it's paid, where it's paid. In an ideal world, you would technically resolve the house situation before you go through a divorce, before you go through a separation. And the reason that is because once you initiate the separation process and once you start going through the divorce process, most of the time, the mortgage hands are tied, because now we're waiting for the judge, right? We're waiting for the child support order. We're waiting for the divorce decree to be finalized and come through, because we don't know what to use as far as debts are concerned. We don't know what the obligations, on both sides of the table. We don't know who's going to be obligated to what, and we have to wait. So we have to wait for that signed around court order, divorce decree, child support agreement, right? Separation order. Ideally, again, you're trying to solve that, and hopefully it's amicable. Sometimes it is, before you go to the courts. Since we don't deal with that a lot, it's planning, right? Talking with your team around you, whether it's accountants, financial planners, advisors, insurance, real estate. We're all just trying to team up and say, okay, if this is the event that's going to take place, on the mortgage side, how can we help? Are you going to plan for a cash out refinance, right? Where you're actually going to take the equity and pay off somebody after it's already been agreed upon? How do we set that up and get that in motion? Are you going to sell, right? And if you are going to sell, is the plan to buy another house? Well, how do you qualify for that next house? Going through the divorce, like I said, you'll have certain obligations, and that's where we could walk through scenarios. Okay, well, if you say your alimony is going to be $1,000 a month, as an example, if that holds true through legal signing, this is what you can expect when it comes time to buy that next house. So a lot of it's just planning and preparation. We're in the middle of it typically, but
I think the principle becomes quite obvious from what I heard from all of you is, if you see this coming, begin talking with your advisors early, right? Because there's certain things, like you said, once you file for divorce, a lot of doors close that otherwise could have been open, Anything you want to add to that, Marie? I know you work again very
Yeah.
closely on the, on the housing side. Anything you want to add to that based on what
I think
Chris?
that's the biggest thing I see is people come to me thinking, okay, we're gonna sell. I come over for the listing appointment, and then their plan is that they're both going to buy. And when I ask them what stage of the process they're in, almost all of the time they're in the wrong stage to be able to do that. So we're just too late into the process, So
Yeah.
again, I know it's kind of probably not the first thing they think of when they start going through this, unfortunately. But again, the sooner, everyone has kind of said this, but the sooner we can be involved as professionals, the more we can help just guide, because maybe they won't be able to buy until it's done. And that's a year out or 6 months out or whatever that may be. But maybe we can help them figure it out early enough where they both can, and the families aren't displaced. That's already a hard enough transition. So anything we can do to help make it easier, obviously, is a win in a tough situation.
Yeah. Yeah, no doubt. You really bring a great point, right? Is that you're dealing not just with the financial side, which is kind of what we've spoken about, but there's the emotional side, right? Where kids especially are going through stuff. And one thing that this decision to wait to meet with advisors to really get best practices ahead of time or not can depend upon if kids are able to stay in the same school district and like all kinds of stuff that could just make a tough situation a little bit easier. So again, just can't emphasize enough. And again, for those that are watching this, I think it's important that you have people that come in from a non-judgmental standpoint and recognize that life transitions happen and it's okay. And that you can really open up and share where you're at and what your goals are and what your concerns are and the things that you want to have in place for your family to make it as easy as possible is so important. And I think anybody that's observing this group will recognize, like, I could really trust these people. They understand me and have dealt with people going through the situation, and they can really offer some great guidance. So anything else before we move on to another topic? Matt, Chris, no pressure if you've said kind of what you wanted to say, but is there anything that's kind of left that, hey, yeah, this is an interesting point around this topic of divorce that people should consider?
I think, I can chime in a little bit, and, obviously the theme of this particular topic has been just get people involved early, right? Get your financial professional team involved as early as possible. And so for the people listening, I would say if you're working with a financial advisor, it's actually our job, yes, to facilitate the difficult conversations, but because we do have a network like I have with Marie and Matt and Chris, we have a resource. So we're kind of the first step where we can suss out a lot of, again, that conversation. Hey, what are you guys planning to do with the house? Are you guys considering, is one of you keeping it, doing a cash out refi? What are your goals? If you're the person moving out, do you want to rent or do you want to buy? And we view our role and responsibility as making it easier so that when they go and talk to Chris Siegfried about a mortgage, or they talk to Marie about a new home, or they're renting, they need to talk to Matt. We've already, gotten to the bottom of what's happening. And so it becomes a much easier process for the other professionals as well, because we've already kind of talked about that.
I think that's maybe a huge takeaway that I've learned as we've really been helping professionals to collaborate, is that sometimes you think housing and you think real estate agent or mortgage loan officer, whereas these other professionals, especially when you can bring them to the table in an environment similar to this around a specific topic, is how much more you get as their client when you hear the different perspectives, right? You wouldn't think oftentimes of a wealth manager being there to discuss a housing situation, right? That's not where most people's minds go. But you have to realize that many people's wealth is very much held inside that. And so to involve a financial advisor in that decision to work together with your mortgage loan officer is not just a suggestion, but it's a great idea, right? And there's things you're going to miss out on if you don't, because they know the full financial picture. And together those two can be extremely valuable. So love it. Great points, guys. Shall we move on? Everybody good?
Yeah.
Okay.
Yeah, let's do it.
Let's do it. So the next topic, since we're hitting all the hard ones up front, we'll hit the more fun ones later. Let's get the tough ones out of the way. Okay, so death. Now, sometimes life allows us to experience this with lots of anticipation and lots of wonderful goodbyes and a life, kind of a well-lived life. And sometimes they don't, right? Sometimes it catches people by surprise. And it's very, very difficult because they didn't have a chance to really prepare for this. Let's talk about this. Let's start maybe with Matt Elliott. When it comes to death, right? You deal with people on insurance. Obviously, people are who have life insurance, right? This is a kind of key topic for them. What advice would you have around insurance that people can start doing now? Whether they're maybe going through this situation right now and there's some advice or things that they can do from a preventative standpoint to make this as easy of a transition as possible.
Yeah, well, clearly the hope is that there's life insurance in force when a loved one passes. That's obviously, I mean, to me, that's the most important policy we ever sell is life insurance, just because it does so much for not only like a spouse, but next generations, things like that. But the most common mistake or the most common learning experience my customers go through is essentially, if I inherit a home, what now? Right. So my parents pass away or my dad dies, whatever it is, and I inherit a home. A lot of people just assume you can just continue to pay the insurance policy that's in force. And that's not the case, right? We got to make sure we get it transitioned over to you as the named insured. And then, hey, what are we doing with the house? Are you going to rent it out? Are you going to move in it? Are you going to use it seasonally as like a vacation home? So all of those things matter when it comes to coverage, right? We underwrite the policy in two ways. We underwrite the people, right, that are on the policy, the owners, and then we underwrite the home itself and how it's being used. So one really unfortunate situation came up when we had a daughter that inherited a home, and about a year and a half later, she hadn't made any adjustments to the policy. So we still had it listed under the father that passed, and we weren't aware that he passed. And sure enough, they had been renting it out and they had a claim, and there's no coverage because we didn't know it was a rental, and we also didn't know the ownership had transferred. So we really should be one of the first calls when ownership is transitioned like that. And the same goes for vehicles as well. People don't think of that either. But in a situation where maybe death is coming, someone's in hospice, unfortunately, or just aging rapidly, whatever it might be, a phone call to us just to kind of get your ducks in a row or ask those questions that might be on your mind is highly recommended, just because we can make that transition very easy, and none of it's a complicated process. It's essentially just starting a new policy in your name. So that would be, again, it's something that's been coming up a lot in our office lately.
It's an interesting point that I don't think a lot of us recognize, right? Is that how an insurance policy is attached to not just the person, but also how the property is used. I wouldn't have thought of that. I mean, I definitely would have thought to call somebody, but in that call, I would have learned that, right? That this is very different coverage, and actually your coverage doesn't apply if it's the property's being used differently than how, the policy was issued. So great point for anybody that's inheriting properties or moving people in and out of properties. So are you saying if I had a parent who was aging and they decided to move into even a senior care facility, and then you were renting out that home, obviously the person is still there, but now the home is being used as a rental. So that could impact the ability to
Great question.
claim.
Yeah, that's a great question. Great point. So again, we underwrite how the home's being used. So when we start a new policy on somebody that owns a home and they're living, right? We know their age, we know, their credit score, we know if they've got auto insurance, all those things, right? As soon as that person moves out, all of a sudden the risk to the insurance company is higher because we don't know who's moving into it, right? So the policy, basically, we need a whole new policy. We no longer have an owner occupied home. We now have a landlord policy, or a home that's, be occupied by somebody that we don't know. And we never need to know who's in it, but we just need to treat it as a rental. The same goes if you're going to do a VRBO or an Airbnb situation, because now we have people coming and going on a short-term basis. So that policy looks a little bit different as well. And not a lot of carriers can do that. We actually have some great endorsements that do cover that. So yeah, a lot needs to change when occupancy changes.
Yeah, boy, great points. Marie, let's go to you. I know you deal with a lot of clients, right? And in a very relationship-based way. I've always admired that about your business, that you serve so many families, but you do it in such a relationship-based way, which many real estate agents don't do that. It's kind of one or the other. They serve a few people at a really high relationship-based level, or it's a very transactional level, lots of volume. And somehow you're magical in the sense that you figured out how to do both. And so I've always admired that about your business. Tell me, what are some things as you think about people when you're dealing with clients who are going through that difficult transition where somebody's passed away, what advice would you have for them? Like, what do you wish that they would know coming into that would be helpful when it comes to the real estate?
Yeah, well, first of all, thank you for saying that. That's again so kind. I appreciate it. I think it kind of depends. Again, it's so case by case, right? But again, the sooner we can get involved, the better, which I know is really hard. But it also is, how many different people are involved in this, and there's just so many things to look at in terms of, how many people involved. Are we, needing to process and do an estate sale? Are we, I think one of the bigger things, this is like jumping ahead too, but one of the things a lot of people don't think about, and I am not an estate attorney, I am not a tax advisor, so I would need everyone to consult with professionals that are, but I run into this a lot where, I'll meet with people a year or 2 or 3 after a death of maybe one spouse and others still in the house. And then we run into the hurdle of they didn't have an appraisal around the time of death of the other. So, from a tax perspective, that can really change things depending on what the market's doing in value. So, one piece of advice I would have is even if you're not planning on selling the house, if you have a good real estate advisor in your corner, or just somebody you can talk to, when an owner passes away, if someone's planning on keeping it, even if it's a family member keeping it or, a child, get an appraisal at the time of death or as close to as possible.
That's definitely something that I wouldn't have thought of, and probably most people wouldn't have, right? Mom staying in the house. And tell me, what is that? Obviously locks in the value as to when they passed away. Help me understand how that helps them, like when they go to sell it, because they can capture that moment in time as to what it was worth when he passed, so that you only get taxed on a lesser amount. Is that,
that's essentially what it is. And again, not a CPA, so can't give full advice. And Chris can probably talk a little bit more, Chris Sleeman, a little bit more on this than I really can. But yes, essentially to get a value at the time of death for tax purposes, if they do go to sell in the future, when let's say the market is substantially, better, essentially, it will help from the back end tax and financial side. But, kind of back to the general question, I think again, it just goes back to the planning, the processing, and, even if a lot of times I'll just do, comparative market analysis, just so the family kind of knows what it's worth, even if they plan on keeping it, at least I can, help give them advice on that. But normally when I walk into those situations, even when I'm doing that, I recommend an appraisal just so that they have that in their file for the future.
I want to go to you, Chris Sleeman, to kind of talk more about this topic in general. But I will say that there tends to be a sentiment with some of the industries that we're looking at here tonight, where, I have a friend or I have a family member and they're in this business and I want to do this to help them, right? And I think we're all like that. We're all wired like that, to want to help people who maybe are getting their start. And I just want to emphasize that while that can be very beneficial to the person who's getting started in their career, and we all appreciate when people did that for us when we got started, I will say that it's really helpful to have great advisors, because the decades of experience and the situations that they've experienced, things like Marie just described to us about getting that appraisal, a newer professional would not have known that. Like, they just wouldn't have. And so you miss out on those things that can be very costly to a family. And so just encourage you the importance of actually working with professionals, not just choosing an insurance or wealth management strategy online, or a mortgage provider online, or, an agent who you really want to help. Like, there's plenty of those options out there. But when you're dealing with so many important life matters, it really makes sense to work with great professionals like we have here with us tonight. So Chris Sleeman, let's talk a little bit about that. Obviously, when death happens, there's a lot going on in your world helping that family. Give us some insight, whether about what Marie was talking about with the appraisal, and or anything else that you feel is super important for us to know about it as we're transitioning that life transition.
Yeah, I think, when we're dealing with clients who are experiencing loss, it's obviously an incredibly difficult time. And so a lot of times, right, we're talking about transitions. So this is a new transition in life. And, we may have had a financial plan for a husband and a wife, but now their spouse is no longer there, and their financial plan may look totally different. In our experience too, I think it was Matt that had mentioned it earlier, there is kind of one person that is like I'm doing the finances or I'm doing whatever, and the other person really doesn't have a clue of, where to even start. I will tell you honestly, because I do this for a living, I don't do my own budget, personally speaking. That my wife does that. I've told her if she passes away, I don't even know what bills come out when and what's in our bank account on a monthly type basis, because that's what she does. And so if she were to go, I wouldn't know necessarily where to turn. So that's a lot of what we deal with when we're dealing with death or someone dying is again, okay, what are your goals? Are you going to stay in the home? Have we had a loss in income? That needs to be replaced. You just gotta, Matt was wonderful, and so there's a life insurance policy, that's going to be paid out. How do we make sure that that's set up, to continue to provide for you or to provide for, wherever you want it to go now that you're in this newest stage. I think the other thing, and it often gets overlooked, is just updating something as simple as saying, hey, especially when you're talking about a spouse that's passed away, most spouses are each other's beneficiaries or their primary beneficiaries. And maybe they don't have kids. And so if one spouse dies, we need to make sure that we update, all the beneficiaries on the accounts. I had an experience, and I should have talked about it during divorce, but, I heard of an advisor when I first got started, advisor down in Eugene, had a client, very successful dentist, was married for a long time to his first wife, but things went sideways. So he got divorced, remarried, and lived out his days before he passed away unexpectedly and hadn't updated his beneficiaries, and he had remarried. So, the question I always pose is, who do you think got the money, the first wife who was listed as a beneficiary or the second wife? And, certainly in the state of Oregon, again, not in the state attorney, but beneficiaries on an account are contract law. You could have a will, you could have a trust, it could name something completely different, but whoever's on the beneficiary is who's, getting, control of those accounts and ultimately taking them for themselves. So.
Fascinating. Sometimes we learn good lessons from the tough experiences of other people. So hopefully everybody that's listening to this goes back and takes a look at that. I do know that having, again, I just can't emphasize this enough, is there's a difference between a financial advisor who is just there to sell products and move on to the next client, right? Very similar to those real estate agents who just sell homes and move on to the next client, versus those with whom you can really have a relationship with and be in ongoing consultation with and bring to the table, even when there may not be a specific paycheck attached to it. These professionals are strong enough in their business that they'll take care of you, right? That they will take care of you as needed, not just when there's another product to purchase. So appreciate you kind of demonstrating that, Chris, that there's a need to have people consulting with you to say, hey, here's all the things that are going to need to take place at a time of this transition to be sure that things are as you hope they would be, right? The right beneficiaries, et cetera. Chris Siegfried, excited to hear your insight here. When somebody passes, when it comes to mortgage, obviously sometimes people are living in a house that maybe they don't want to be in anymore. They can't maintain themselves, right? That's one factor. What else? That and any other scenario that you see and feel like there's some important things for people to know that are going through that situation.
Yeah. A lot of the times what I see is family members will come to us and say, okay, we're ready to buy a house. So-and-so passed away and we have an inheritance. Round examples, right? Let's just use square numbers. We want to buy $1 million house. We have $500,000. What should we do with it? And a lot of the times people think, okay, easy. It's stuck in this trust. We're just going to send the money on over, right? And then we're going to buy the house. We have to validate the trust, right? We have to see who is responsible on the trust, who actually has the right to the trust. Even if you think you have the right? Kind of like the beneficiary thing, not a state attorney, but you have to find out who is what's the word? Pretty much who has the ability to write the check. We have to verify that. And that can sometimes trip people up in the purchase process. They just think that they have money and they just think that they can go buy a house. So again, it comes back to planning, in my opinion, right? You have to prepare ahead of time before you're ready to go out and buy a house, make offers, talk with your advisors, right? Because the last thing you want to do is go out, look at a home, fall in love with a house, and not know how to buy it. So I don't, yeah, I'd say that would be one of the biggest things. They know they have money, they just don't know how to get the money. And then when we say, okay, prove it, they're like, what do you mean? So.
Now, Chris, do you do yourself or even refer out reverse mortgages? Do you see that being used often? Okay.
Yeah. So certainly reverse mortgages, right? I'm not going to be able to speak too highly to it just because I think that that takes a special individual to understand and help people with, right? That product specifically. In years past, there's certainly a negative connotation with reverse mortgages. I think they actually call them something else now. Home equity conversion mortgage is now the name. HECM, home equity conversion mortgage. And there are nuances to it, that I wouldn't be able to speak to as far as like, if we're about to die, can we just throw a reverse mortgage on the home? I don't know that answer. My assumption is maybe, but yeah, reverse mortgages can be beneficial. I don't do them. And the people that I refer to are usually partnered with financial advisors when they are helping with reverse mortgages.
Yeah, great. I know that there can be mixed reviews when they're done right. They can be a great benefit to a family, and when not, right, when people don't have the right expectation coming in, they can be not so good. All right, before we kind of wrap up this particular topic, did anybody else want to add anything else and giving great insight to people who, a family or household who's going through death, right, having someone in family? Is there anything that we missed that we want to cover before we move on to our next topic? Get it all?
I think the only thing I would say, as we've said, is just talk to a professional, whether it's your real estate agent like Marie or your mortgage broker like Chris, or, or your insurance agent like Matt, or a financial advisor like me. We take a lot of, a lot of experience that we have, but I'll be the first to tell you if I don't know about a particular topic, right? If I don't know something about a mortgage, because of death, or what all the ins and outs may be, with the current real estate market, I don't know the answer, but I have a team of people that I know the answer that I can go to. And they're actually on this call right now. So, for those listening, even if your advisor or your professional doesn't know the answer, the chances that they know someone that does are probably better than doing a Google search trying to figure it out on your own.
Yeah.
I'd add one thing to it too. I mean, we've talked a lot about timing and being proactive with, planning, but also the more we know, the better, right? I think sometimes people are protective over information for some reason, like maybe, hey, I don't want them to know that. But on my end, at least, the more I know about your plan or your situation, the better I can protect your assets, right? Leaving something out really doesn't help your cause. The more I know, the more I can work for you, the more I can advocate for you if a claim happens. And I know that there's scenarios with the other three experts on this panel that probably would agree with that kind of a situation coming up. So not only just being proactive with your planning and communicating, but man, tell it all, because, again, it's not leaving my office. It's what you share with me is all it stays with me and my team. But yeah, just the more I know, the better.
Yeah, I do think that people, especially around money issues or situations, people tend to be super private. And I think we forget that you professionals deal with people's money all day long, and you've probably seen everything under the sun. And it's not, and some people are reluctant to reach out and ask for help and consultation because they feel like it's maybe embarrassing as to where they're at, or, they're in a bad situation. And I just know the better the professional, the more they come from a spirit of service and adding their years of experience, decades of experience to help you versus judge you, right? And so again, if anybody out there is like, I can't tell anybody where I'm at financially, not like that's what these professionals are for, is to help get you through whatever situation you're in into a better spot. So I love that you said that, Matt. It's good stuff.
I'd like to add one thing too. I think that this day and age, it's so easy to just go online and look for answers, right? But you're not always going to you'll find an answer that may appease you, but like Matt said, right? Like we need all of the information, and we're just here to help. You can click and get qualified for a mortgage, right, on Rocket. And then all of a sudden you're down the road, you're like, oh, now I can't. Why is that? Well, when you're having these consultations, right, or these conversations with any of us, professionals in the industry, they're asking questions and listening just as much as you're talking, right? Because we need to know all the information. And like Chris said, if we don't have the answer, we're not just sitting there Googling, we're going to people who are tenured and have the answers, right?
Yeah.
So some of the time it's, oh, hurry up. We have to go buy a house right now. What do we do? Pause. Right? Planning is so important in all of this. And I think, it goes without saying, we're all just here to help and listen and put together a plan with you.
Yeah, that's great. Great advice. All right, let's move on. We have a number of other topics. Time goes so fast when I'm with great professionals. We have downsizers. Let's talk about that one, because I do believe that there is a group of people who are in a spot now where maybe they've been raising a family, and it's been pretty clear on what the next steps are. Well, we need a house with this many bedrooms, and we need it by this date because this is when school starts. And like, it's just kind of scripted out. And all of a sudden they get to a point where it's like, okay, kids have moved out. They live in different places. We could live somewhere different, but, and we really want to simplify life, but there isn't really an exact timeline. And so it can almost be challenging, right, to kind of know how to downsize and what they should be looking for. Let's start with Marie, because obviously downsizing oftentimes begins with people rethinking their housing situation, right? Maybe something a little more simple, maybe on a main level. What insight would you give to somebody who wants to downsize and just simplify life, maybe spend more time traveling or visiting grandkids, et cetera, right? As opposed to having a big house with lots of people living with them, right? Any insight you have on this topic as you help people through that transition?
Yeah, I mean, this is happening a lot right now. I feel like it's definitely a big piece of the real estate market, especially with, like you said, you kind of hit on the head with people trying to get into one level, or at least majority of the living on the main level. I'm getting a lot of people that have, been in their family home for a long period of time. Their kids are all adults, starting to have kids, and now they're looking for that last home that they can live on the main. If there are some bonus rooms upstairs or downstairs or bedrooms for their grandkids, that's, something that some of them are totally into too. And it's a different mindset, letting go of a past home with all those memories and kind of starting fresh in a new one to create new memories. So, that piece really is just, again, it's a lot of planning, and the sooner we can start doing it, the better. It's a lot of, okay, do we need to sell first to buy? Are we buying first and then selling? Do we need to kind of go through, and do I need to help you, declutter and organize? And I can bring in professionals to help with that if it's something that they just don't want to, tackle. Some people want help with that. Others want to do that themselves. But, again, it goes back to having great professionals in our network that we can, help refer and kind of have on speed dial for even those types of things. So, again, it's just starting early, and every single person's different with, really what they're wanting, what their goals are, what their timelines are. And, it's just helping them plan and be there for them. And sometimes I'll meet with these people. Gosh, I think I talked to somebody probably a year and a half ago about this, and, it just wasn't the right time. That's a big move. And that's emotionally actually really hard for people sometimes to let go of that place that they've often raised their kids in, And so sometimes I meet with them a year or two ahead of time. And I just got a call last week, actually, from someone I talked to about a year and a half ago, that they're finally kind of ready to pull that trigger. So we're going to be meeting and kind of just walking through what they need to do to get ready, but they're going to purchase first. That way they don't have to move twice. And so if you have that ability, that's great. If not, I would always refer to, someone like Chris, who can help look at what it looks like from a mortgage standpoint, what makes sense for them.
Yeah, I can imagine that would be, like you said, just back to there's the financial concerns and the emotional concerns, right? Chris Siegfried, let's since we're talking about the housing side of it, what advice would you have for seniors, right, who are wanting to downsize, simplify? There's certain things from a mortgage standpoint that they should be aware of.
Yeah. I think a lot of the times people just assume that they're going to qualify for the house, right? Because we're downsizing, we're going to get less of a house. We're going to have all this money that we can just put into the next house. It gets back to, again, planning, right? Having that conversation in advance, kind of like what Maria's talking about. We have that conversation in advance. What are you looking for? Like, what is your budget, right? Don't tell me your house price number that you're looking for. Like, what do you want to spend on a monthly basis? And then we can quickly just reverse engineer it into, okay, well, if this is how much you're going to want to spend, this is how much loan you're going to need. And then are you able to bridge that gap with that price point that you're interested in? And we can do all of that before you even are ready to sell. There's nothing here that says, we need to see that you're really ready to sell before we start putting together a plan, right? That's just not the case. A lot of people also want to use that equity in some fashion to buy that next house. And some of the times they can't qualify until they do sell. So I think that's where, someone like myself, we have a breadth of product where there are options where you can buy something first, then sell. You can sell first, then buy. You can do different options where you get into a home and maybe, you can qualify for both payments, right? As an example, and the new house is a little bit more than you want, and that equity windfall's coming, and you want to drop your balance, use some of that equity to pay down your mortgage, right? And there's different re-amortization programs out there where you can get to that budget, that plan that you originally had. Maybe it's going to be a couple of months, but then you take the money, put it into the new mortgage, and then you set off with the budget that you had in mind.
Lots of options. And again, kind of back to the core theme of like, get advisors involved early, right? Some people, again, sell their house and then see how much they have left to do it, right? And that can be quite disruptive and definitely not in the right order. If you can talk through it first and create a strategy that even allows you to reverse engineer in, that's great. Let's go to Matt, Elliot, and then we'll end with Chris on this topic. When you're downsizing, what insurance questions or concerns should somebody have or at least be aware of?
So typically if someone's downsizing on our end, not a lot's going to change. I mean, a homeowner's policy is a homeowner's policy. But if you're going, from a policy where your construction cost was $1 million because the home you were living in was, 4,000 square feet and you downsized to 1,500, clearly we're going to have some savings there. One thing that does come to mind, at least as a reason why someone might want to downsize is maybe it's retirement and they're transitioning into a fixed income situation. And at that point, the deductible you might choose on your homeowner's policy matters a little bit more. For example, when you're in your earning stages, a higher deductible to save some money on your homeowner's insurance makes sense. So you might have a $2,500 or $5,000 deductible, meaning we'll pay everything after that in a claim or a loss situation. And all of a sudden your fixed income, you retire, your fixed income, you just don't have access to that much money on a whim because you're just not earning and you've got that budget for vacations and, going to see the grandkids or whatever it might be. We want to make sure we've got a deductible that you can handle without, putting yourself in a bad spot financially if something did happen. But outside of that, the insurance side of things is pretty straightforward from going from one house to another.
What about when it comes to long-term care? Do you deal with that insurance? Maybe that's more a question for Chris Sleeman. Is that something?
I do not, but yeah, that's something that I would certainly refer out.
Yeah. Let's move to Chris Sleeman. Thank you, Matt. Talk us through downsizing. What are some key things that people should be aware of?
What we help our clients with downsizing, unlike kind of the first two topics, is that typically people have started talking about it. Hey, we're thinking about downsizing, or they know that they're getting to retirement, or they know their kids are, graduating and moving out of the house. So it's a conversation that starts usually soon, as opposed to a death, which may be sudden, or a divorce, which may be, the process may have been long, but the final decision came quickly. With downsizing, what we help our clients do is kind of answer those questions. Okay, you're downsizing. Are you taking the equity that's in your house and you're going to just buy one outright? Are you, going to consider, taking a new mortgage on? What do we do with the equity that's in your house from there? Does it make sense for you to just pay all cash with your equity, or to take out a new loan? Can you afford it? So What I've taken away from all of these, professionals that I'm on the call with right now, and I've worked with them, is, when you're working with them, and myself included, our job isn't really to tell you what to do. It's to figure out, hey, what is it that you want to do? And what is the best option, right? It's to lay out all the different scenarios that are there so that you have the information that you need to make the best financial decision for you. So that's what is, and especially with downsizing, right? Like from a financial planning aspect, hey, it actually makes more sense for you to take, yes, a portion of your equity, apply it to your new home, but God willing, Chris is going to tell us that mortgage rates are going down at some point. And Marie, right? And so, yes, let's use a portion of that. But look, if we, use a portion, your mortgage payment's going to be X, Y, Z, and we invest the rest, we've now just created, an even better financial picture for you. So,
I think you brought up a point. I would imagine there's some people out there that either maybe don't want to talk to their financial advisor or they don't have one because they don't want to hear their input on their life, right? I've heard that perspective before of like, I don't want someone to tell me what I do with my money. When what I heard you say is different, which is, what's the life you want? My job is to help you to get there, right? It's not, I'm scripting out what kind of lifestyle you're going to have. Like it's your life. You decide what kind of lifestyle you want. And my job's to help you actually get there, right? It's to actually work the finances to where you could actually have that, right? Because all good lifestyles need, good funding. So I love that. Great perspective for anybody that's been kind of shy of getting an advisor involved. So,
yeah, I think to add to what Chris said, that's really important is when we do see people sell and they do run into a bunch of equity, a lot of the gut reaction is no mortgage, let's not have a mortgage, right? In my opinion, you have to get someone involved on the finance side, right? You have to get your planner, your advisor involved because let's say you're running into that retirement age and maybe you don't have a lot saved up and all of it is in your house, like the majority of people, right? So you're going to live out the rest of your life without a mortgage, still paying taxes and insurance, but you have no savings, income generating, assets out there. Maybe there's a game plan, like Chris is saying, right? Put together a plan, right? And split it up. And if that burden is so much down the road, you're like, I still just don't want that payment. There aren't any prepayment penalties on these mortgages. You just can pay it off. But once you put it in, once you have no mortgage, right? You buy that house with cash, it's a little bit more challenging when you retire. All right, now you don't have any income, no job. You're living off Social Security. You're living off of maybe retirement, right? Or maybe not in this situation. It's a little bit harder to qualify and pull that cash back out. So all the reason to, when you're in that position to downsize, you have a bunch of equity, start putting together a financial plan.
Great insight. Yeah. The house can be a good choice to choose from if you structure things correctly, right? But sometimes if you don't choose correctly, there's this actually not an option to access all that equity that's in there. So awesome point. All right, guys, we have just a couple of minutes. Let's do a quick fire round. We had one more topic that we wanted to cover tonight, which was first-time home buying. So I want just one bit of advice from each of you. This is kind of what we call a fire round, which is, again, on this topic of first-time home buyers, what's one bit of advice that you would give to somebody? We'll start at top left of my screen. Matt, what's one bit of advice for first-time home buyers?
Gosh, don't trust the internet with insurance. There's so many things that go into homeowners policy that if you assume or you assume from an article or two that your new home's going to be covered correctly, you're going to end up in a bad spot. So definitely consult with a professional.
So good. All right, Marie, you're up.
How about don't trust the internet and anything real estate related either? No. Man, I have so many. I would say hire an agent that you connect well with that's going to be in your corner. I see a lot of buyers, either one, trying to settle for things they shouldn't settle for just because they're trying to get in. And I see others that are trying to reach for the world that maybe that's not the right starter home. So I think it's just pairing up the right people to help you because you're new, and hire someone that's going to take the time to go through the whole process with you and just really be on your team. You need a team. Get a good team like this team.
Amen. That should have been the final words. That was fantastic. All right, we'll go Chris Sleeman, and then we'll end with Chris Siegfried. So what do you got, Chris?
For first-time home buyers, oftentimes we're talking about younger individuals. So, what we help our clients and first-time home buyers do is really just kind of figure out their budget if they don't have one, right? What can you actually afford? And then I think the other aspect, that we always try and bring to the table is oftentimes your first house isn't the last house, right? And so, just putting a little bit of reality into okay, here's your first house, but we have other goals, right? This is our kind of our shorter term goal. I want to get into this house. Working with Chris and Marie, hey, what are the down payment, requirements in order for them to qualify for this? All right, how do we plan for that, right? What's our savings method going to be? And really helping them achieve that goal, but also keeping the bigger picture in mind that this is your first house, but probably not going to be your last. And we'll adjust it along the way with you, but yeah, just kind of educational at that point.
Awesome. Great. All right, Chris Siegfried, bring us home, my friend. Comes to first-time home buyers. I know this is a topic you love. You help a lot of people in this realm. What's some great advice you'd offer to them?
Yeah, so first-time home buyers coming into the market, don't try and time the market. Don't wait for interest rates to go up or down. Go through the process of getting pre-approved, put together a plan, figure out your budget, right? And then when the right house comes along, you'll be ready to make that decision. Oftentimes, especially now, we're constantly seeing people say, hey, let's just wait for interest rates to so that we can qualify for more house or drive our payment down. I saw a stat the other day that with a 1% rate drop, you're going to see about 5 million people jump into the market. And we have an inventory problem in this country. So basic supply and demand is going to say that there aren't any houses to sell or not enough houses to sell, and we have a whole bunch of more buyers, we're going to be in the same predicament of price issues, right? If rates do come down or when rates do come down, people are going to be crawling over each other for the houses. So don't wait to time the market. Get in early as far as like getting qualified and pre-approved to figure out what it is that you can afford based on your budget. And then you can just sit and marinate and wait for that house that you want to come, or you put together a plan and plan down the future.
Great insight. I see that as well, Chris, of like, we're just going to wait until rates come down, and they're just inviting prices to go up and competition to get thick when people are playing that game. That's a tough one to win. So I just want to say thanks to everybody that's either those that have been watching live as well as those that are watching after the fact. Hopefully you recognize how unique this has been to have this caliber of professionals from different industries all coming together on your behalf to talk through these topics. I want to give my heartfelt gratitude to each of you who I'm sure have many demands, not just in your professional life, but in your personal lives. I know that about you. And to come and really contribute to the community of Sherwood tonight, to give this kind of insight will really benefit lives for many, many years to come. So thank you to each of you. And I would say to everybody that's listening, if you don't have advisors in each of these areas, insurance, real estate, wealth management, and mortgage, that's a 9 or a 10, do yourself a favor and go find one who's a 9 or a 10. In other words, okay, we have them here. So reach out to these professionals. If you're not watching the live stream, but you're seeing the recording afterwards, we'll be sure and put their contact info up. They'd love to meet with you. If they're not the right fit, they'll be the first to tell you. These are professionals who serve a lot of clients, and they're looking for people that are the right fit for them. So please reach out to them and get them involved early. Again, the decades of experience that they will bring to the table will be such a benefit to you as you really move your life forward when it comes to both dealing with the transitions as well as just you reaching your goals. So thank you all so very much. I've loved spending time with you. Grateful for your contribution. And I'm going to ask you all to stay here for just a minute.